Welcome back, everybody. You know, stock staged a stunning comeback today on signs that the crisis in the U.S. currency markets could, we say could, be subsiding. The Dow Jones Industrials bounced back from last week's 140-point drubbing. In fact, it lost about 180 points over 6 trading days, reversing things with about a 48-point gain today. Now, the dollar and its stabilizing effects probably helped things a little bit today. Many people even said the Leon Panetta appointment as chief of staff, a friend of the bond market, we're told, didn't hurt matters any. Here to make sense of all of it, Amy Smith, the currency analyst over at IDEA, and from our New York City bureau, Stephen Flanagan, a foreign exchange dealer over at Payne Weber. We've got the brainiacs of the currency markets, folks. All right, good to have both of you with us. Amy, let me begin with you. Some stability in the currency markets today, but a lot of people were blaming that on a lot of reasons. They say that it's still just a matter of time before the dollar does exactly what it was doing in Tokyo this morning, and that is flirting with all-time lows against the yen. Do you buy that?
That's right. I think you put it in perspective. We've fallen some 10 pfennigs and 6 yen within 3 weeks. Today was a nice period of consolidation. But the same woes are underlying the dollar. Fears that inflation is on the uprise here, whereas it's contained in Germany and Japan. And again, growth tapering off while it's picking up overseas. Those are the two fundamental problems that are being exacerbated by politics. That will push the dollar back down.
Stephen, let me ask that to you. Do you think that the dollar, regardless of today's stability, is headed lower?
In the general picture, yes, I do. But the United States is putting its best effort on in coming forth with a coherent dollar policy. I think that really is at the root of what the dollar weakness is that we've been seeing recently.
Kathleen, you wrote an intriguing piece on this very situation, Investors Business Daily, on the weekend. You can give me the check later for that. But anyway, in all seriousness, one of the things that you raised was the fact that this didn't work. This latest wave of intervention did not work. What I'm curious as to why it didn't work, and whether you think that another concerted effort would.
Well, maybe what I should have said is it didn't work yet. And certainly people have said, well, maybe the timing wasn't so good. They should have come in earlier in the day, et cetera, et cetera. And what should be added is that was the first round of intervention. And if they are serious about supporting the dollar, there will be more rounds of intervention. And then I may write a different story saying, gee, they finally did dispel that negative cloud of sentiment hanging over the dollar. What many people say more and more is that one thing that would surely help the dollar is if Bill Clinton, President of the United States, and Treasury Secretary Lloyd Bentsen and everybody else lined up and said loud and clear, we want to see a stronger dollar. We do not want to see a weak dollar. This would be good for the global economy. Because at this point, they have created the impression, starting with February of '93, when Lloyd Bentsen came out and said, sure, we wouldn't mind seeing a stronger yen, that they would like to see a weaker dollar, and that they're using this still as a cudgel, as a weapon to force the Japanese into opening their markets. And they have to change that impression, particularly if they want to do something on the dollar yen.
I hate to make one vulgar point, but the vulgar point is we're running a big trade deficit. The reality is we're running a trade deficit. The reality is that our currency is overvalued, is still overvalued compared to the currencies in Asia. And it seems to me that that's reality. Reality is the dollar's going to go down some more.
I don't agree with you.
Against the yen.
I don't agree. I think
absolutely.
We do have a huge trade deficit. But that's partly cyclical. It's partly cyclical because they've been in a deep recession.
Well, even on the best case scenario, we have a trade deficit.
And so both of you are right. All right, Amy, I want to ask this: what can the Fed do about it right now? Now, it can either buy dollars at the behest of the administration, or it can raise interest rates. We've seen, I think, interest rates hike 4 times or so in as many months, and the dollar still has slipped through that process. What do you think happens now?
I think they need to take very aggressive tightening. Another 25-point snugging may not do the trick. People really believe they've pursued soft policy for far too long, and that they have let inflation get out in trouble.
So what's an acceptable level by which to raise rates?
They need to raise rates by some 75 basis points.
Amy, you're obviously a real hawk on this thing. There's no doubt about that. Do you think it's worth a recession to keep the dollar strong?
Well, again, I think that it's not necessary that you're going to throw the economy into recession by tightening policy.
But suppose that was your choice. Would you be in favor of the recession?
I don't think that they should dictate policy to try and prop the dollar. I think the dollar has other fundamental problems, which, as you're mentioning, is a current account deficit. When you're having trouble having countries funded, that's the real element that's different this time.
Exactly. Now, Stephen, that's what I want to raise with you. There's this feeling out there that the Fed shouldn't really be paying attention to the dollar at all, that its primary considerations are the domestic economy. If it starts paying attention to the dollar, there's a whole nother thing to look at when the markets are fretting about so many other things. Do you buy that?
Yes, I do. Left alone, I think the dollar standing by itself can't be the determining factor. The dollar will eventually find some area of support, most likely in the lower levels of 150 versus the Deutschmark, and the yen probably at least the 95 level is beckoning here. But I don't think that specifically a standalone issue can be the dollar right now.
And I think the dollar, I disagree with you. I think the dollar is undervalued. I think the yen is overvalued. It is really crimping the Japanese economy, and that is a problem. Furthermore,
No.
I tend to think that left alone, the currency traders are going to realize that a dollar below 100 does not make sense, and that the speculators are
Why is it
going to
any
get
different
hurt.
than a dollar at 265 yen?
Because I don't think that...
It ill behooves the greatest nation in the world to sit around worrying about the yen and the mark. Our policy, as the greatest nation in the world, should be we are seeking a combination of price stability and growth. That is our policy. If you don't like it, sell dollars, buy dollars, do what you want. That is our policy, and we're not going to depart from it. Now, if we in fact run inflationary policies, there's no excuse for that, but we're not doing that right now. So I think the appropriate policy is to clamp their mouths shut, say nothing about the dollar, and let it do what it wants, as long as we pursue policies of stability.
And I agree with you as far as the Federal Reserve is concerned. Do nothing, let the dollar do what it will.
Well, one of the things that at least has jarred the markets over the weekend was, for the fourth time, I think, in a little more than a year, new leadership changes in Japan. Now, Amy, when you take a look at Tsutomu Hata out of power, and yet a new political instability, a lot of people say that this is going to delay progress on trade, and hence the dollar just falls by default. Do you buy that?
I do, and this is where the political element of dollar-yen's fall comes in. I think the trend is definitely fundamental, but the U.S. administration has accelerated that move. And to the extent that when they've had problems getting trade progress, tangible trade progress, they've resorted to a firm yen.
Well, I'm not sure I understand it. Steve, maybe I can bounce this off you. Amy says that it's fundamental, and I've heard that before, that the dollar trend downward be fundamental. But those are the same fundamentals that were supposed to favor a stronger dollar before. That is, an improving economy on our side of the globe versus ones that were way behind abroad. That didn't help the dollar, so who's to say that these new dynamics will?
We've got to single out the yen. I mean, yen, we run into sellers on really any big moves on the upside, because Japan basically is a natural seller of dollars with the exports that they're running to the U.S. So we're always finding that selling of dollar yen. The current account and trade surpluses in Japan are a natural force pressing the dollar lower. And as Amy said, when you added the political element in, when the U.S. encouraged a strong yen, that's really accelerated this process. I think we would probably be at these levels a little bit later in the calendar, but with that acceleration now we're threatening with 100.
So you're saying, Stephen, yes or no, that we're going to slide further?
I think that the dollar can slide further versus the yen.
And Amy, you're saying much the same thing for a variety of other reasons.
Right. No, well, nobody cares. I'm saying the same thing.
Well, there, that cinches it right there. Okay. Bill Woman, you got the last word on this subject. Kathleen, as always, a pleasure. Our special guest star is Amy Smith of IDEA, and of course, Stephen Flanagan of PaineWebber Inc. As always, a pleasure, folks. Thank you very much. That'll wrap up today's edition of Business Insiders. If you're wondering what stocks to buy, sell, or hold, Business Tonight coming up after this.